Hello everyone, this is Dave Drimmie here. It's another Wealthy Wednesday podcast, and I have to say I am so delighted to have a good friend of mine here today, a real expert in terms of knowing your numbers, and his name is Craig Alexander Rattray. He's a phenomenal guy, and you're going to get so much wisdom today. So recently we have been talking about the CRASH acronym, and really, what we're going to talk about today is know your numbers, which falls into that. So, Craig, welcome, sir. How are you doing?
Thank you, Dave. Thank you for having me. I'm very well, very well. Looking forward to chatting with you today.
Oh, listen, I'm so delighted. So Craig, as we've alluded to, and we're going to talk about this later on, you've got a program. It's called Know Your Number, knowyournumbers.biz. Is that correct?
Yeah, that's the website. Yeah.
That's the website. So we're going to chat about that later and why you created. But first, obviously, you've come from you've got a really interesting background. Could you maybe share a little bit about your background and briefly your journey to where you are today?
I'll try and keep that reasonably brief, Dave. It's been a journey over the last just over 30 years. So I qualified in degree in accountancy at Strathclyde University in 1991. I had offers from all of the big six at the time, big six accounting firms. I chose to join Arthur Andersen, basically because they paid the most, and you got a 2-week training course in Spain at the start.
Excellent.
Stayed there for 3 years, during which I spent a reasonable amount of time in corporate finance, which was good because I realised very quickly I didn't want to do audit. From there, I moved into private equity. I worked for 3 different private equity companies over the next 6 years. I then spent a couple of years in industry with the subsidiary of a New York Stock Exchange listed company that was based in the south side of Glasgow. I learned more during that 2 years than I did in the previous 8-9 years. And that's where a lot of what I do now has come from. Then I was finance director of a couple of companies. I worked for a corporate finance and business management boutique, and I did some work with some high net worth individuals investing about €1 billion in German property. And in 2009, I set up myself. And setting up myself in 2009, the main aim was to provide part-time finance director roles for growing ambitious clients and helping with their general strategy. You know, we're here, we want to go here in 3 years or 5 years or 10 years, and help them do that, help them raise the finance and basically make their business better along the way. And that's evolved over the course of the last 13 years or so. In fact, it's almost 13 years to the day since I set up.
Well, listen, I think it's absolutely fascinating. And obviously, my background, as you know, is I was a quantity surveyor for nearly 20 years. In fact, we started off roughly the same time. But all the way through your track record there, you've clearly got some basic training, some foundations in place, and then you've gone on to gain expertise in the areas you've talked about. We both do a lot of work with construction companies, so there's a lot of guys out there who have come off the tools to run their own business, but they've kind of reached a ceiling. So how, with all the areas of funding and equity, how do you think all your knowledge is helping, for example, and I know you do multi-sector, but particularly folks in construction, how do you think that's helping the construction businesses that you work with?
I think to start, we need to take a step back and understand that most people who are running businesses, and whether that's construction or some other sector, they're running that because they understand that sector. You know, they know how to build houses, or they know how to, provide a particular type of service, because that's what they've been taught in. But they've never been taught about finance, accounts, banking, cash flow, any of these things. And what happens is that as the business grows, they then move into managerial roles that they've perhaps not been trained for either. And that makes it very challenging. And it's the old classic, you don't know what you don't know. So people set up in business, they bring on a couple of employees, they grow, they bring on a couple more. And all that happens there is that the working capital stretches more and more, so that whilst you are turning over more and probably generating more profit, your cash position is becoming worse. And for many business owners, they're the worst paid person in the company because they need to pay the employees first, then they need to pay the suppliers. And as you're growing, if you've not filed accounts, you won't get the level of credit limits you need from suppliers. So cash is always tight. So what I start by doing is understanding where is the business just now, because in most cases they don't have up-to-date financial information either. So you need to know where you are. You need to make
Okay, so when you talk about understanding, so let's unpack this a little bit, okay? We've got business owners there who are, no matter what sector they're in, they're technicians. If we go back to the E-Myth, for example, Michael Gerber talked about the technician, the manager, and the entrepreneur. And so but before we go into the different types of knowing your numbers, if you think about that aspect of things, are you mostly seeing people who are technicians who try and jump straight into an entrepreneur and then try and figure out the management stuff as well? Can you help the folks listening understand that a little bit more from your perspective?
I would say so. I would say that most of the people that start working with me are technical entrepreneurs. So they're ambitious, their business is growing, but because they don't have the right financial information in terms of historics and prior information, they certainly don't have forecasts. And if you don't have forecasts, it's very, very difficult to go and get funding from a bank, because the first question the bank will ask you is, well, how much do you need and what do you need it for? Now, if you can't produce a forecast that shows that, you've got very little chance of getting that funding. And in order to get that forecast, you need to know where you are and where you've been. So it follows a reasonably logical step for me that if I can work with the company and the entrepreneur to make sure they've got someone in place who does that bookkeeping, and it could be an internal accountant, it could be an external accountant, to make sure all of that information is up to date, that's a great starting point. It was something I learned way back in 1994 with one of my first bosses. If you do everything every day, you're only ever a day behind. And that applies to many things, but it applies to financial management in particular. So if you process your sales invoices, your purchase invoices, you do your bank recs, you do all of these things every day, you're always up to date. So you come in the next day and you do the work from the prior day, and that's it. So you're constantly up to date. And if you can then develop where you want to go, your business might be turning over, 1 million, 2 million, whatever that may be, and you want to go to 10 million or 20 million, we can then develop a plan that shows what that is, and we can build the financials around that. And in doing that, we can see what are the people we need, what's the infrastructure, whatever else we need, and then it allows us to work out what the funding is. And once we know what the funding is, we can then work out, right, where's the best place to go for that? Can this be funding from a bank in terms of debt finance, or do we need to go and get equity investment from an investor? And typically that's where I start in all of these situations.
So it's basically a forensic analysis, if you like, a diagnosis. My wife's a pediatric consultant, and she deals with little tooties. I mean, the little tiny little neonatology. Yeah. So she has to speak to the parents to fully understand what's going on before she can make a diagnosis herself. And what I've learned in business and in what I do is very, very similar. We've got to unpack what's going on before we can. It's cause and effect, isn't it? I
need to understand what's there. So I had a message from someone through LinkedIn today, been watching your posts, watching your videos. I need to speak to you. Can you give me a call? So gave him a call. And typically the first questions I'm asking are, do you have management accounts? Are your prior year accounts filed? Do you have a forecast? Now, typically, do you have management accounts? Sort of, will be the answer. Are your prior year accounts filed? Yeah, I think so. Do you have a forecast? No. And that's pretty much 90% plus of the situations I will come into. So I will then chat through and work out what are your ambitions, because I only want to work with growing ambitious companies. Whether you're turning over 1 million, 5 million or 50 million, if you're going to be doing the same next year and the following year, that's not for me. I want to work with someone who's at 1 million who wants to go to 2 to 5 to 10 to 20, because that's where my skills and expertise come in. So I'm trying to understand if that's the right fit for me as well. And very much the starting point is, right, let's get under the hood and see what you've got. And often my roles will involve a project to start with. So we will then work out, right, what do we have? What do we need to put in place? Do we have someone in-house that can do it? Can your existing accountant do it? Or do we bring in another accountant to do all of the where you are and where you've been work? I don't do any of that work. I'm interested in what's happening tomorrow, next month, next year, in a few years. But I need all of that other work to be done. So in terms of where you are, where you've been, and where you're going, I will make sure the in-house team or the accountant are doing the first two parts of that, and I don't spend a huge amount of my time there.
No, I think it's a huge distinction, and I see a lot of accountancy companies as very much generalists, and more worrying, the accountancy companies who don't use cloud software. So how can they possibly help their clients be fully up to date in real time? And more and more are moving, whether they're using, Xero, QuickBooks, Sage, any of these wonderful tools. But it's amazing how many accountancy practices do not do that. So that must frustrate you as well, coming from your background, is it not?
It does, but it's often used as an excuse, Dave. If I look back to, it would have been, about 1999 when I did my first role in industry. Now, this was long before cloud accounting software. I still managed to put in place systems and procedures where we did everything every day. I had to report to my divisional head office in Houston, Texas, within 3 days with flash figures for the whole month and 5-day full reporting packs. So I had to put in place the people, the systems, the procedures to allow us to do that. So if I could do that, 20 years ago plus, then there's no excuse for people doing that now, because it's so much easier now. You've got all the apps that can take the information, all the receipts can go in, your bank feeds talk to Xero and QuickBooks and all these other systems as well. So there really is no excuse for not being up to date.
No, very valid. I think we all have, as business owners, we've got distractions, and often for business owners out there who are entrepreneurial, they find it difficult to let go of everything, and they've got employees, but they kind of go, well, I'll sort it. Any problems come to me, instead of delegating down.
Yeah.
And then you've got a full inbox, and then you've got your iPhone dinging off and what have you. So you're all confused.
But that's where you've got to build the team, and my clients that do best are the ones who recognize what they're good at and what they're not so good at, and they build the team and bring in the right people. So it works best if they've recognized, yes, we've got some weaknesses here in finance. I'm going to focus on doing the operational part of my business. I will bring someone else in to run that part of the business, either on a full-time or a part-time basis. And all of my roles are part-time, and I make sure we've got full-time people or other external people that do all of that for us. And in doing that, if you're approaching that by way of looking at that as an investment rather than a cost, because if you think about it, if your business is growing from $1 million to say 5 million over a couple of years, work out the incremental profit on that, and the costs of bringing in any finance person or bringing in financial support pale into insignificance. So I want to work with people who are thinking investment rather than cost.
So that's fascinating, actually, I think. But that ties in with the growth mindset. And I just did a quiz recently, and out of the respondents, basically, the stats were interesting because 39.8%, nearly 40% of people have hiring issues right now. But 20% of people want a better work-life balance.
Yeah.
But if you bring in the wrong people, you can't get the work-life balance. So what you're really sharing here is, put it another way, the three major challenges I come across consistently with business owners are cash flow challenges, which can be sales and profit oriented, but going into all the other areas you've discussed, hiring the right people and work-life balance. Those are the kind of three common areas that the business owners think they need. Now, there's much more think they want, but basically what they actually need is much deeper than that. But with regard to the know your numbers side of things, so you've got a great program which you've put together based on all your experience and over the years and dealing with clients day in and day out. And that we'll give the website at the end of the podcast here, but could you maybe just jump into your reason for creating that, and maybe just give us an understanding of the different areas? Because I hopped on a wonderful webinar that you did with the amazing James Fleming, and I have to say, you broke down a complex subject into such a simple way for people to understand. And but maybe if we could start off with the know your numbers, that'd be great.
But just to go back to that, Dave, you say it's a complex subject and I made it simple. I actually disagree. I think it's a simple subject that accountants and finance directors make complex unnecessarily. There's nothing difficult here. And Know Your Numbers was born out of COVID, really. When COVID came and everyone panicked and people were looking for loans and funding from banks. And typically the first questions the bank will ask you, can I see your management accounts? Can I see your forecast? And most of these clients had to answer no for both of them. Now, all of my clients have got management accounts, we've got historic accounts filed, we've got forecasts. So we sorted out any funding requirements in a matter of about 2 weeks. And it was as things progressed and I just started better understanding that business owners don't understand this. Now, I've always known that, but just some of the things I was sharing, people were saying to me, like, you need to teach people about this. I think Christmas in the first lockdown, it was when I wrote the book, Mastering Cash Flow for Business Owners. And again, that was written to help business owners manage their cash flow. It's an 80-page book. If anyone wants a copy of it, connect with me on LinkedIn and just say, send me a PDF of it and they can have that. But that was to make cash flow easy for business owners because it's something business owners worry about. And it's the same when you go to accounts and finance, because most business owners don't understand a profit and loss account or a balance sheet. And if I look at the latest Know Your Numbers Mastery group that started last week, we've 12 people in the group. One person set up their business within the last 6 months, and the one person set up their business 35 years ago.
Wow.
Exactly. And he has never been taught about the P&Ls and balance sheets. So, I try to break this down into just its basic constituent parts. And I don't think it's complex. I think one of my big criticisms of accountants, and if you are an accountant, I apologise in advance because I will be critical of most of you, because it's, too much time is spent looking back rather than looking forward. But also, how many accountants explain a P&L and a balance sheet to their clients? But more importantly, break it down into the constituent parts, and focus on key areas they should be looking at. Looking at your gross margin, looking at certain KPIs in your business, looking at things that you should be focusing on. Because it's not just a case of producing this information for the sake of it. The whole point of producing management accounts is to use them to make decisions in your business and improve your profitability, your cash flow, and your shareholder value. So all of my clients I'm working with have part of my role is to educate them on all of that as well. And Know Your Numbers is all about doing that in a group format. So we've got people who are across different businesses, different stages of development, different sizes, who will listen to the teaching, who will take a chance in one of the hot seats, but will also interact with the rest of the group as well and learn things from their peers or people who are ahead of them or people who have gone through challenges that they've not yet gone through or perhaps are sharing experience. So there's a lot more than just the learning of it there. And for me, that's about educating these business owners who understand their business very, very well operationally, but in general are badly advised from a financial perspective.
Because there's a huge amount of trust that's placed in the accountant for the business as an advisor, and often they're not interviewed, and that's a challenge in itself. They're maybe a friend of a friend, which is fine. But when somebody comes in like yourself, who's actually got this very specialist knowledge and can advise, right, well, you need a bookkeeper or you need maybe to change your accountant or whatever. I think that's fantastic. It's almost like being a cardiac surgeon, isn't it?
Yes.
You're coming in with that expert knowledge.
But also, and again, I apologise in advance to accountants, but typically what will happen is there'll be no explanation. They'll turn up at the end of the year. In fact, not even at the end of the year, 8.5 months after the end of the year to say, right, that's your year-end accounts. You've made X. Send the revenue a check for Y. I'll see you again next year. Now, the poor business owner hasn't got a clue what he's just signed. He's received no value whatsoever in terms of understanding his business, and he's already, eight or 9 months through his next financial year without learning anything from what he's done before. So the whole point of having up-to-date financial information is that allows you then to make changes that month. And if you've got a forecast and you're looking at actual against budget and analysing your variances every month and doing that, during that next month, then you've got time to start making changes and doing things. So, if you've got positive variances, understand why they're positive, do more of it. If you've got negative variances, again, understand why they're negative and make changes. And what you do in those situations is you make your business better. So you're using that information to make better decisions, to run your business, and in doing so, improving your profitability, your cash flow, and your shareholder value. And for most people who are in business, I think that's why they set up in the first place.
Yeah, definitely. And to move it, you've got a lovely model. When I was watching the webinar the other evening, got a lovely model. Could you unpack that a little bit and into the segments and just give us a snapshot, maybe a brief description of why you put it together and maybe each of the areas?
Yeah, and again, it's very simple. It's understanding where you are now, where you've been, and where you're going. And if you look at that in terms of the financial information you need for your business, in terms of where you are now, that's making sure that your online accounting system is up to date. And for anyone who's not using online accounting system, ask your accountant why and tell them you want to do it, because I can't think of any reason why you wouldn't. But that's looking at your current management accounts. And your current management accounts will typically comprise a profit and loss account, a balance sheet, and ideally a cash flow as well. And also, in an ideal world, you should be looking at actual against budget and looking at your variance analysis, like I said. And you may also have some key performance indicators, key KPIs, so some key metrics or measures in your business that are relevant for your business, but are the things you should focus on in order to influence performance. For some businesses, it might be turnover. I prefer to look at things like gross margin, which is your gross profit divided by your turnover. It could be things like stock days. It could be your work in progress. It might be debtor days. But pick 3, 4, 5 metrics here and focus on them every month and work out what the key drivers are of the business. If it's people, if you're selling people's time, then you're looking at utilization or average charge out rates. If you're vehicles out and hired, again, you're looking at utilization and understanding those metrics and making better decisions. And that's basically where you are now. In terms of where you have been, that's reasonably simple as well. That's looking at your statutory accounts and making sure that your returns to HMRC and Companies House are up to date. Not something I spend a lot of time on. It's something that your external accountant should be taking care of, but it should be taken care of very quickly after the year end, not 8.5 months after year end, 2 weeks before you're due to file the accounts. Just get your year end done and dusted, and if you don't want to file them, you don't need to, but have them sitting ready to file. And in terms of the time I spend, I will spend about 5% of my time in the where you have been. I'll spend maybe about 20% of my time in where you are now, because we'll analyse the management accounts. The bit that excites me and interests me, and the bit where you really derive value in your business, is about where you're going. And this covers forecasts, cash and funding, and sale and exit. So we've got 3 parts to each of the 3 areas within the framework. So forecasts, as I've said before, many businesses don't do forecasts. 1, they don't know how to. 2, they say it's too difficult. I don't know what's going to happen next week or next month. Well, funnily enough, none of us know what's going to happen next week or next month, but we can make an educated guess. And at the end of the day, a forecast is only a series of assumptions in terms of how your business is going to perform. Now, it could be 2 assumptions, it could be 102 assumptions. And all you're doing is you're building up those assumptions, whether it's on the sales side of things, the cost of sales and the overheads, because you know a lot of these things. You might have a contract with someone that says, it's 10,000 a month or, $1 million a month, whatever that may be. and go through the range of different contracts you've got. So you build that up. You then know what the costs are. You know what your material cost is or what your labour cost is. You can make an educated guess based on what's happened historically. You should know what your overheads are. You know, your rent, rates, insurance, your people. You know that because you know what you pay every month. So if you can draw the list of your assumptions and you can go through each one and say, yes, that makes sense, yep, verified that. By default, your forecast has to be right. Now, the chances are tomorrow your forecast will change because some new piece of information will come in, but your forecast was right at that point in time, and that's all we can ask. And then you're updating that on an ongoing basis. So all of my clients will have a monthly profit and loss account, balance sheet, and cash flow forecast that will go out to the end of the current financial year and probably the next financial year as well. And they'll also have a rolling weekly cash flow forecast done on a receipts and payments basis, so we can see what's coming in and out on a weekly basis. And it gives us time to react. And typically I will spend half an hour with every client going through that on a Monday or a Tuesday most weeks, so we can see that cash is okay. We'll then use those forecasts for the funding side of things, because they will then tell us what funding do we need to deliver our strategic plan or our business plan. And in that situation, we would then engage with the proper funder. Whether that's a bank or an investor, we need X, here's why we need it. And typically what the bank will ask you is, where have you been, where are you now, and where are you going? Exactly the framework that we're working on. So everything you're working on in your business is exactly what the funders need. And my role in all of this is to make the funders' life easy. Simple as that. And it then takes us into, in terms of the future, where you're going. That we talk about sale and exit as well, to a lesser degree, depending on the the stage of the business's development.
I think what you've created is it's lovely because it's literally step by step by step. It is literally present, past, and future.
Yeah.
And the fact that you're spending 25% of your time in the present and the past, and the bulk of your time in the future, speaks volumes. So
we can't change the past, Dave. We can't change what happened last week or last month. It's already done, right? So let's just gather the information and move on, but actually take it, learn from it, and use it in terms of going forward. And that's
Correct.
where good finance directors come in. If I look at accountants and finance directors, anyone can tell you what happened last week, last month, and last year. You just pick up the bank statement, right? So you don't have to be particularly good to do that, right? Where the real skill comes in a finance director is understanding what's going to happen next week, next month, and next year, and actually reacting to that and making sure you've got in place the right funding, particularly now. I've been talking a lot about funding over the last couple of weeks in terms of making sure you've got the right cash and the right working capital. There's so much uncertainty. And I've never had a client come to me to say, we've got too much cash in the business. It never happens. And I'm encouraging clients at the moment to take whatever availability they can get, whatever funding they can get at the moment. Make sure you've got plenty of it, and don't have yourself short on it.
There was a post you put up on LinkedIn yesterday, actually, which I found absolutely fascinating, about a business owner who basically ignored your advice, and you'd given all this wonderful insight into what potentially was going to happen with their business, and they went, we're going to ignore you, and it came back to bite them on the bum, didn't it?
Yeah, I guess the only surprising thing was it happened so quickly. I knew it would happen. I thought they might have got to December, but it didn't. And again, supposedly an ambitious business, they wanted a working capital facility. I managed to get them a very good working capital facility at very good rates on a confidential basis. It was about 50% of their prior year turnover, so that's pretty good, particularly given they were in the construction sector. And they decided that don't need it, too expensive. All their clients are paying us within 2 weeks. Okay, that's fine, but I think you should still take it, even if you don't need it just now, because things are changing. No, it's fine. I said, well, what happens if your clients don't pay you in 2 weeks? Oh, they always do. I said, yeah, but what if they don't? No, they will. And inevitably they didn't. And the company now has a CCJ for £9,500, which will now impact on their ability to secure another working capital facility. So short-sighted, missing the big picture, and just disappointing that they've jeopardised their business by probably looking at the cost of things rather than looking at this as an investment in terms of growing the business.
Well, I think it's frustrating as somebody in your position, or like myself, if you can clearly see what may happen in a business and business owners do not take your advice, it's like, well, I would pull my hair out if I had any. But basically, what actually happens is it must be enormously frustrating for you.
It is, and as is just business owners in general not understanding finance. I want to help. Okay, don't get me wrong, I'm not a charity. I want to make money, over the course of what I'm doing. But I have no issues whatsoever helping people, pointing them in the right direction and trying to give advice. And that's what I try to do in the posts I do and in the videos I produce as well, to give the benefit of my experience and things that my clients are doing right, and unfortunately occasionally where they don't take the right information.
Absolutely. And you're a busy guy, so I really, really, really appreciate you taking the time to come on here. But there's a lovely positive story you shared about a company, and you and I both know who it is. But basically, you have been able to take a business owner over the last couple of years and take him from not understanding accounts to a real growth role.
Yeah.
And I've seen some of the branding recently and what have you, which is exciting. But could you maybe just share, to finish on a really positive note, as opposed to the last story, maybe you can share the journey this unannounced business owner is on, if you like.
I can make it more general, Dave, because I've got 4 or 5 clients who have reasonably similar numbers in that type of journey, where when I started working with virtually all of them, they were turning over less than $1 million. And we looked at what they were doing from a financial management perspective, made some changes in-house, externally, either changed accountants or sorted out the accountants to do exactly what I thought they should be doing for the business. And on the back of that, developed a strategic plan for the business to say, right, over the next 3 years or 5 years, here's where we're going. Built a financial forecast around that, worked out how much cash we needed, or facilities we needed to put that infrastructure in place, and went and engaged with funders in all of those cases, secured the right amount of funding, and those businesses are now all growing. And one of them, after this will be the 3rd year, they'll be just over, they've gone from $500,000 to about 5. There's another couple have gone from that sort of number to about 4.5. And there's another one that's just a bit behind. They've gone from maybe 1 to 2, and they'll maybe do about 3.5-ish this year. And what was happening with all of them was that they had the opportunities there, but they didn't have the funding to allow them to take advantage of those opportunities. So nothing's really changed in terms of what was there. All that's changed is the financial management and the funding. And rather than them collecting all the cash from a customer and it all going out the next day, and then they wait for that cycle to happen again, they've got ongoing cash, they've got ongoing information, and we're using the information to run the business. And I think with all of those businesses as well, the gross margin has gone up too. So it's not just a case of driving for turnover. We're driving the profitability. We're getting the gross margin up, and EBITDA percentages are going up as well. So it's fantastic. And all I'm trying to do is facilitate that and point people in the right direction. They're doing all the hard operational work. That's it. It's them and the operational team that are doing all of this. I'm just sitting in the background, making sure that it's the finance side is working in tandem with the operational side.
Fantastic. And I think a key point there is, if the gross margin has increased, then maybe the financial reckoning throughout the financial process you've taken people through is you'll have looked at their fixed costs, you'll have looked at other areas to drive profit to the bottom line, etc. So you've given them more stability from that side of things, which automatically affects margin.
I spend a lot less time on fixed costs than people might imagine. I'm more interested in driving the margin, so driving the sales and enhancing the margin, because that's where the real benefit comes from. Yeah, you can maybe save a few £1,000s here and there on the overhead base, but you're really just tinkering with things. If you can take the margin up 5% or 10%, and the company's turning over a couple of million, we're talking six-figure sums there.
Absolutely. Absolutely.
And that's the sort of thing we're looking at doing, and that's where then bringing me in and bringing in the other expertise we need in the financial side. The costs of that pale into insignificance in terms of what the business is actually generating, and you then add an exit multiple onto that as well. Whether it's 4, 5, 6, whatever that may be for that business, then it really is looking at that from an investment perspective and looking at the big picture. The other thing it does as well is it allows business owners to sleep at night because they're no longer worrying about cash, how they pay themselves, how they pay suppliers. And if I look across a lot of those clients, they're all paying themselves significantly more than they did when I first got involved. And that's because they're now properly funded to allow themselves to do that.
Fantastic. And I think you touched on it there. I mean, a lot of what I do when I go into a business is it's looking at the goodness within the business, looking at the opportunities. Yeah. Really, the sales is important, but also what's fascinating is that often it comes down to, strategic plan, strengths, weaknesses, opportunities, threats, and trends, but also what are the core values in a business as well.
Yes.
And I've heard two stories this last week. One company, it's like a revolving door. People are coming in and going out. Hires are coming in and going out. It's just horrific. And It seems like working there is horrible. Another company is attracting amazing people. They haven't focused on the core values, but the core values are part of the company. And word of mouth is getting around and great people are moving there, and not for massive amounts of money, which is happening to other companies where it's all the focus is about money.
Yes.
So I think this, if we can build a foundation of marketing that creates the wonderful sales with the right kind of clients, where you've got a decent margin, and then we can build in the systems, including all the strategic aspects of what you've discussed as well. I think a business owner, for me, my mission is to help business owners really free themselves of having a business that takes over their life. It's to work with someone like yourself, for example, to optimize that business so the business owner can sell it for a 4, 5, 6 multiplier by literally handing the keys across.
Exactly. And also, if I think of some of the testimonials I've received, I think one of my favorite testimonials was a client who said to me, and his wife was involved in the business, managing the finance side and managing the cash. And given the way the business was growing before I was involved, they were really stressed and they used to argue a lot, or they'd spend weekends and evenings discussing cash. And this client said, we no longer worry about cash. We don't discuss it outside the office. And I've got my wife back. And for me, that's just fantastic, because that's how it should be. If you're doing all these things properly, you shouldn't be worrying. You should be sleeping at night, and you should know exactly where you are from a financial perspective. So it's nice when people take time to say things like that.
Well, Craig, listen, thank you so much. This is so packed with gems. It's unbelievable. Your knowledge is wonderful. I genuinely hope that anybody listening today is going to go back and listen to this again, because it's absolutely jam-packed. Thank you. So what I'd like to find out, how can somebody who's been listening to the show today, to this podcast show today, how can somebody get in touch with you and remind us again of where they can get to know their numbers?
Best place is just to connect with me on LinkedIn, Craig Alexander Rattray. You'll get me there. The Know Your Numbers website is knowyournumbers.biz, and my personal website is craigalexanderrattray.com. So you should be able to find me across one of those platforms. And as I say, if anyone connects with me on LinkedIn and they want a copy of Mastering Cash Flow for Business Owners, please just send me a message to say, I heard you on Dave's podcast. Can I have a copy of your book?
And it's a really, really good book, folks. It's really easy to read, 80 pages long. you can sit there and read it in one go. It's absolutely brilliant. And backed onto that, I'm also going to say you've got short snippets of videos on your knowyournumbers.biz website.
Yes, within the resources section, there is the Know Your Numbers Training Academy that's got about 60 short videos between 1 minute and 3 minutes. And also, if you go into knowyournumbers.biz/diagnostic, you can actually test how well your business and you know your numbers, and it will come up with some suggestions for you. You'll get a score as well. It'll let you see where you are. Takes you 2 minutes.
The website that keeps on giving, Craig.
That's the point. It's about, for me, Dave, it's about educating. Yeah, I want to make money. I want to engage with successful business owners, but it's about giving back and sharing that knowledge as well.
We're so aligned because that's one of my core values as well. It's literally about providing education so business owners can free themselves of the shackles of running a business.
Absolutely.
And it really is like that. And as you talked about your testimonial where your client got his wife back, that speaks volumes. So with that, I'm just going to remind quickly again, knowyournumbers.biz, and it's CraigAlexanderRattray.com is your personal website. And then on LinkedIn, it's Craig Alexander Rattray. Is that correct?
That's it, Dave.
Fantastic. Listen, everyone, this is another wonderful, wonderful guest on the Wealthy Wednesday podcast. It's been so much fun, and I genuinely hope that you got huge value. So please continue to listen in every week for fabulous insights from amazing people like Craig, and genuinely hope you're getting value. Thank you so much.